India's latest economic maneuver could be about to shake up your investment portfolio. While other major economies are challenging the US dollar's dominance, India has made a surprising move, causing ripples in the global financial landscape. This decision extends beyond mere economics, playing into a larger game of international influence and power dynamics. How might India's strategy affect your savings and investments? We'll explore India's approach to the dollar and its potential impact on your financial future. Stay with us as we unpack this complex issue and what it could mean for your money. The BRICS nations, Brazil, Russia, India, China, and South Africa, are at a crossroads, facing a pivotal decision in international trade, whether to maintain their reliance on the US dollar or forge a new path. De-dollarization, the move to reduce dependency on the US dollar in global transactions, is more than an economic strategy for BRICS. It represents a bid for greater autonomy and influence on the world stage. The US dollar's dominance in international trade has long given the United States significant economic and political leverage. By shifting away from the dollar, BRICS nations aim to protect themselves from US sanctions and diminish America's global financial influence. However, this issue has exposed divisions within the group. China and Russia are the primary advocates for de-dollarization, viewing it as a means to challenge US hegemony and boost their global standing. With its booming economy and ambitious Belt and Road Initiative, China sees BRICS as a potential vehicle for expanding its economic reach. Under Western sanctions, Russia is eager to find alternatives to dollar-based transactions. India, on the other hand, occupies a unique position. As a rapidly growing economy, India benefits from strong ties with the West and its BRICS partners. This delicate balance has led India to make an unexpected choice, embracing the US dollar rather than joining the de-dollarization push. The geopolitical dynamics driving this agenda are intricate. China's efforts to promote its currency, the renminbi, as an alternative to the dollar aim to increase its economic influence. Russia sees de-dollarization as a shield against Western economic pressure. India's stance, however, complicates these plans. As a significant economy within BRICS, India's decision carries substantial weight. By sticking with the dollar, India makes a calculated move to maintain its economic independence and leverage its growing global importance. India's choice to reject the move away from the US dollar has several implications. It allows India to preserve strong economic ties with the United States, its largest trading partner, providing access to crucial technology, investments, and markets. By not fully aligning with China's economic agenda, India maintains its strategic autonomy and avoids over-reliance on any single power bloc. Furthermore, India's decision reflects a pragmatic approach to global finance. The US dollar's stability and wide acceptance ensure smoother international transactions and maintain investor confidence in India's economy. This stability is vital for India's ambitious growth plans and aspirations to become a global economic powerhouse. India's decision to embrace the US dollar creates an intriguing tension within the BRICS alliance. As the world's fastest-growing major economy, India has become an attractive destination for foreign investment and a key player in international trade. This growth has positioned India as a formidable force within BRICS and on the global stage. India's choice to align with the dollar contrasts sharply with China and Russia's de-dollarization efforts. This strategy divergence has created unique dynamics within the alliance, with India emerging as an unexpected supporter of the dollar's global dominance. Maintaining strong ties to the US dollar benefits India significantly. It ensures stability in foreign exchange reserves, which are crucial for economic stability. India's decision also strengthens its relationship with Western economies, positioning it as a reliable partner amidst shifting global dynamics. However, this stance carries risks. India may face increased tensions within BRICS, potentially leading to economic pressure from its partners. Given its growing influence within the group, it might also strain bilateral relations with China. Despite these challenges, India's decision could have far-reaching implications for global trade. By reinforcing the dollar's role in international transactions, India's stance could counter the influence of alternative currencies promoted by other BRICS nations. This move could reshape global finance, with India playing a pivotal role in maintaining dollar dominance. India's strategy appears driven by pragmatic concerns for its trading partners, many of whom lack sufficient dollars for transactions. India reinforces its necessity in trade relationships by using the dollar, potentially strengthening its position as a key facilitator of global commerce. This approach could position India as a bridge between dollar-dominated Western economies and emerging markets its BRICS partners represent. India's embrace of the US dollar could trigger significant changes in international finance. The decision's impact extends beyond currency markets, affecting stock exchanges, commodity prices, and global trade patterns. The interconnectedness of global markets means India's move has wide-ranging consequences. Currency values, trade dynamics, and investment strategies are all likely to shift. The US dollar may strengthen against other currencies, particularly those of BRICS nations, influencing import-export relationships across various industries. Initial market reactions have been mixed. Some view India's decision as a vote of confidence in the dollar's dominance, while others see it as a missed opportunity for BRICS to challenge the existing financial order. This uncertainty has led to increased volatility in currency markets. Experts are split on long-term predictions. Some suggest India's decision could reinforce the dollar's status as the world's reserve currency, potentially slowing efforts to create a multipolar financial system. Others argue it might accelerate the development of alternative financial instruments as other BRICS nations seek to counterbalance India's influence. The dollar's potential stability, supported by India, could lead to shifts in global investment strategies. US assets might become more attractive, potentially drawing capital from other markets. This shift could have significant implications for international trade agreements and economic partnerships. For investors, this development warrants a reassessment of portfolios, especially those focused on emerging markets. Consider rebalancing to account for potential currency fluctuations. Dollar-denominated assets may become more attractive, but diversification remains crucial for managing risk. Pay close attention to sectors sensitive to currency movements, such as multinational corporations and export-oriented industries. As we navigate these turbulent financial waters, a new question emerges. What are the implications of India's embrace of the dollar for the future of global finance? The next decade could witness significant changes in international economic relationships. And it all starts with understanding the hidden forces at play in today's shifting alliances. To grasp the potential implications of India's decision, we must examine the current state of international finance. The US dollar has long been the world's reserve currency, facilitating most global trade and financial transactions. This dominance has given the United States significant economic leverage and political influence on the world stage. However, the landscape is evolving. In recent years, some BRICS nations, particularly China and Russia, have been pushing for de-dollarization. These countries view reducing dependency on the dollar as a way to shield themselves from US sanctions and diminish America's global financial clout. The development of alternative payment systems reflects this desire for greater economic autonomy. Despite these efforts, the dollar's position remains strong. The share of alternatives like the Chinese renminbi in global foreign currency reserves has remained relatively high, indicating persistent concerns about their stability as reserve currencies. Even the euro has weakened recently, with investors increasingly turning to gold as a haven amid geopolitical uncertainties. This complex backdrop sets the stage for several possible scenarios regarding the future of global currencies. We could see the emergence of a multi-currency world, where regional economic blocs develop their financial systems for international trade. Alternatively, the dollar's resilience and India's recent endorsement could reinforce its continued dominance. The formation of new economic alliances is another possibility that could reshape the financial landscape. As geopolitical tensions rise and economic interests diverge, unconventional partnerships based on shared economic goals, technological cooperation, or ideological alignment might form. In this evolving scenario, India's role becomes increasingly crucial. As the fastest-growing major economy, India's economic decisions carry significant weight. Its embrace of the US dollar while maintaining ties with BRICS positions it as a potential bridge between different economic spheres. This strategic positioning could allow India to play a pivotal role in shaping global finance in the coming years. India prioritizes stability and continued access to Western markets and investments by aligning with the dollar. This decision could accelerate India's integration into global value chains and strengthen its position in international trade. It reflects a pragmatic economic growth approach, favoring established financial systems over experimental alternatives. However, this choice has risks. India's stance might create tensions within BRICS, potentially limiting its influence. It also ties India's economic fortunes more closely to the US economy, exposing it to potential volatility in the dollar's value or shifts in US monetary policies. As the global financial landscape continues to evolve, India's decision may be a defining moment in shaping the future of international economic relations. India's decision to embrace the US dollar reinforces its global dominance while challenging the de-dollarization efforts of other BRICS nations. This move positions India as a potential bridge between Western economies and emerging markets, potentially reshaping global trade dynamics and investment strategies. The implications of this decision extend far beyond India's borders, affecting the global economic landscape in still unfolding ways. These changes will likely impact financial strategies worldwide as they continue to develop. As we witness this potential shift in the global economic order, it's worth considering. How might you adjust your financial approach to navigate and potentially benefit from these changes? The answer could significantly influence your economic future in this evolving global landscape. Did this analysis surprise you? Hit that like button and share it with friends who love exploring economic trends. Want more deep dives into Asia's dynamic economies? Remember to subscribe to StatStream and turn on notifications. Are you curious about how the Philippines compares to Asia's giants? Watch our analysis, Best Economies in Asia. The Philippines takes on China and India. You'll discover surprising insights about the Philippine economy's potential.